Hello friends, in today's session we'll be learning about fund-based accounting in respect of not-for-profit organization. Now, to understand what is fund-based accounting, first we need to know what do you mean by the term fund. So what is fund? Now fund means amount which is received or which has been set aside by an NPO. So this not-for-profit organization receives fund in the form of donations, or it might keep aside from the amounts that is received certain amount separately for specified purpose. So fund is nothing but amount which is received or set aside by a not-for-profit organization for specified purpose. So for some specific purpose, amount is being allocated. Now, in respect of a not-for-profit organization, it will be maintaining separate bank accounts for each of these funds. So for each fund, it will maintain a separate bank account so that the amount that is put into that particular bank account will be used only for that particular specified purpose. Examples of different funds that you can find are like you might have something called as building fund, prize fund, library fund, etc. So you can have different types of fund. You can have sports fund as well. So these are all different types of funds which you can find in the books of an NP. Like building fund. From the term you understand that this fund has been created for the purpose of building. So amount which is received for the purpose of building would be put into this separate account which is maintained for the building, and that amount which has been set aside will be utilized only for the purpose of construction of the building for which it has been raised. Prize fund. From the term prize fund, we can understand that this fund has been set up for the purpose of distribution of prizes. The amount which has been received will be invested, and that amount might be utilized, whatever is the income amount which is received and the fund amount, it might be utilized only for the purpose of distribution of prizes for which it has been set. Similarly, library fund. Library fund, from the term you know that probably a library is being set up, and for that purpose fund has been raised, and this fund would be utilized only for that specific purpose of setting up a library, whether it is a building for the purpose of purchasing books and setting up the library. So these are some examples of different types of fund that you would find in an NPO. Normally, we would find these funds would be reflected in the balance sheet of the NPO. In the balance sheet, on the liability side of the balance sheet, you would find these specific funds. And the fund balance would be denoted like this. You would have, if it is already existing fund, then you would have opening balance. But if it is the first year where the fund is being created, you would not have an opening balance. So the opening balances, whatever is amount received towards that particular fund, like the donations which have been received during the year for that specified fund purpose, like for building purpose, if donation has been received from donors, then that would be added to this particular fund. If some of this fund was invested outside in some securities and income has been received, then that income which is earned on the investments that has been made of this fund, that also would be added to this fund. Then there will be certain items deducted. That is the expenses associated with this fund. Whatever is the expenses or the payments that is made for that specified purpose for which the fund has been created, that would be subtracted. And finally, the closing balance would be the amount that would be seen in the balance sheet going into the total of the balance sheet. So this is how fund balance will be created. And this process that is followed is called as fund-based account, where amount is set aside for a specific purpose. What was received is added to the existing fund. The expense or the payment made is subtracted from the fund, and the closing balance is kept aside for further use for that particular fund in the future. So this entire process is called as fund-based accounting. Now moving further, normally this fund-based accounting that we are following, the funds would have a credit balance, and that is why the balance appears in the balance sheet on the liability side. But however, as we move further, we will find that there might be situations where the fund shows a debit balance. Normally this happens when the fund is for purpose of being expended, not creating an asset, not an asset. So you're not having that fund for creating an asset. Then there is a possibility that the fund balance can have a debit balance. So for this purpose, to understand where this debit balance would be depicted, we need to understand that a fund account can be of two types. One where an asset is not created and one where an asset is created. To understand this concept, let us understand it using an example. Like for example, when it is a prize fund, here the fund is being received from the donors. They have donated saying that you utilize this amount or the income arising by investing this amount for the purpose of distribution as prizes. So that is why this fund is created separately. But here no asset is being created. Whereas you have building fund. So when money is being received towards building fund from the donors, there is going to be a creation of an asset here. Which asset? A building. So building is going to get created here. When the amount which has been received from the donor is put into this fund, and when that amount is utilized for the purpose of construction of the building, there would be a creation of an asset. This will be reflected on the asset side of the balance sheet as building. Once the amount is utilized from that fund, a building is created. Now to understand this further, let us take example. First, we'll take the case of prize fund where an asset is not being created and understand. So first is the prize fund. Now we will take an example, like suppose for example the opening balance of the prize fund was say rupees 10,000. During the year, donation was received towards the prize fund. So that would be added to that particular fund which has been set up for that particular purpose. Suppose that was rupees 6,000. Further, suppose some amount of this fund balance was invested outside in some securities and interest has been earned. Suppose that interest earned on that particular investment is 1,500. Then that also would be added to that fund and has to be utilized for that particular specified purpose. So totally, as of now, there is 17,500 in the fund. And now during the year, if the prizes were awarded as per the decision of for the purpose for which this fund was created, prizes were awarded, and the prizes awarded was say suppose 15,000 worth of prizes. Then still 2,500 is left in the prize fund This is the closing balance, which is a credit balance. So where would this appear? This would appear in the balance sheet on the liabilities side as price fund. Under the head price fund, the details as this is given, this would be specified, and in the outer column this would be the fund balance that would continue into the next year's balance sheet as price fund opening balance. Now suppose in the same case, here suppose we take the same situation, the opening balance was say same 10,000 rupees. The donation received was also the same. They received donation during the year of say 6,000 and they have earned interest on the investment made outside in some securities. This fund was invested, so totally 17,500. But suppose during the year they awarded prizes worth 20,000. So here what happens? They have spent more than the fund that they had. They had fund balance of 17,500 only, but they spent on giving away prizes worth 20,000. So they have spent more. This leads to a debit balance here of 2,500. Now when there is a closing balance which is a debit balance, then under such circumstances, this would be put on the debit side of the income and expenditure account. So in the income expenditure account on the debit side, which is the expenditure side, this extra amount which has been spent would be put as prizes awarded. It would be on the debit side. So this is how a prize fund, a fund where asset is not created, can have a credit balance which would be reflected in the balance sheet on the liability side. But if that same fund is having a debit balance because of the amount being spent being more than the fund balance, the debit balance would go into the debit side of the income and expenditure account. So I hope that is clear. So now moving further, we will take the case of the building fund. Here in case of building fund, actually here the amount has been set aside for the purpose of construction of building and therefore an asset is being created. So the asset created here is the building. Here the treatment would be different. Now here if we have the building fund which would be written on the balance sheet liability side, we might have an opening balance of whatever amount. Then we would have whatever is the donation received towards the building fund. That would be added to that particular fund. So we add it up, we get the total. From that, if there is any particular interest received by investment, that also would be added. So interest received would also be added. Both are added together and the total amount now available in the building fund would be there. From that amount would be spent on construction of building. So during the year payments would have been made for the construction of building. That would be subtracted. Now this amount which is made as payment would be transferred from the building fund to the general fund or also known as the capital fund. So here what happens is that the amount which is subtracted from the building fund which has been utilized for the purpose of construction of the building, that would be deducted and that amount would be transferred to general fund or the capital. General fund or the capital fund, as we call it by different names, also appear on the liability side of the balance sheet. It would also have an opening balance. Now this amount which has been subtracted from the building fund would be added to the building fund. So you will write transferred from building fund. So whatever was subtracted there gets added to the general fund, and the total would appear in the outer column in the back. And on the asset side of the balance sheet, this was the liability side of the balance sheet. On the asset side of the balance sheet, whatever is the amount which has been transferred here from the building fund into the general fund, it represents the amount which has been already spent on the building. So there is a building which has been created physically there. So that amount, same amount, would be shown on the asset side as in progress as long as it is not yet completed. Once completed, this term will be removed till the time amount is received towards a fund, utilized for the construction, and to the extent utilized is transferred to the general fund and is added to the building on the asset side of the balance sheet. So this is how fund-based accounting is done. So with this, we come to the end of today's session. If you found this video useful, please do like, share and subscribe. Thank you. Have a great day.